a hard money lender here in Houston. And for those of you guys who don't know me, my name is Haley Gant. I am one of our IRA specialists here at Quest, and I work with the rest of our marketing team to help to put on these events for you guys and basically all of our educational content and events that we put on throughout each month. So before we get into today's class, I do just have a couple of quick announcements for you guys, kind of as we let people get signed on here. For those of you who don't know who Quest is, we are a self-directed IRA custodian. We're based out of Houston, Texas, but we do have clients all across the country. So physically, our offices are in Houston, Austin, and Dallas, but we have clients in all 50 states, and we have about $2 billion in assets under our management. Now, something that makes Quest really different from a lot of other IRA companies is really the types of assets that our clients hold in their IRAs here at Quest. So here at Quest, our clients use their IRAs to invest into real estate, promissory notes, private placements, and it's a really great way to not only diversify your retirement portfolio and the investments that you're holding in your IRA, but you also have more control over where your money is invested. So IRAs get really awesome tax advantages that not a lot of people are really educated in. And it's really valuable if you're able to combine these tax advantages that we get with IRAs with investments like real estate, notes, and multifamily investments. And through this, we're able to see a lot of our clients grow their IRAs through investments that they have more control over. And along the way, Quest does a ton of education. You can rewatch today's class as well as all of our other classes at any time on our YouTube channel. And I'm really excited that we're actually bringing back our in-person events coming up here in August. But I have another slide about that here in about a minute or two, so I'll go ahead and keep on moving here. Now, the last bullet point of this slide is really important. Please be aware that at Quest, we do not give tax, legal, or investment advice. We provide a lot of education. We put on a lot of events, and we bring in a lot of different guest speakers. But please be aware to always do your own due diligence before you enter into investments. You know, these deals with your IRAs are 100% self-directed. You get to choose who you work with, but it also comes with some added responsibility. So we really cannot stress that enough. Just make sure you're not rushing into deals with anyone and you've taken the time to make sure that you are working with the right professionals for your deals. Now, the rest of my intro slides kind of are mostly about our upcoming events and promotions that we have going on right now, but I do know that we get a lot of current clients watching these classes as well. So if you are a current client with Quest, be sure to check out our online client portal. This online client portal has a ton of features. It has custom reports, expense pay, where you can upload your investment expenses and invoices at any time directly online. And we actually have a new feature through the client portal called the QTC Investment Hub, where you can now upload all of your investment documents and information directly to the investment hub. And you can get real-time updates from your transaction specialist as you're submitting those investments to be funded as well. Now, like I was mentioning at Quest, we host a lot of education. If you're new to self-directed IRAs, we really pride ourselves on being some of the best in the industry when it comes to self-directed IRA education. You can find all of this information on our website under our education tab. We also have all of our classes available on our YouTube channel as well. And if you are not local here in Texas, we do have our virtual networking happy hours that we host twice a month on the first and third Wednesday. And these are really awesome. Whereas most of our classes are set up as a Zoom webinar where, you can only see us, you can interact in the chat, but you can't really share your cameras and speak to us. The virtual networking happy hours are actually set up as a Zoom meeting. So everyone involved can share their cameras, you can interact with other attendees, and it's a great way to meet other investors pretty much all across the United States. Now, we do have our Quest Summer Intensive going on right now. We are actually gearing up for day 2 of the Summer Intensive here tomorrow. This is our last big online conference that we have going on right now. And since we are about halfway through the event, we do have a special discount code for you guys. I do actually have Evan, one of our IRA specialists, here online moderating today's webinar. Evan, I know you've got a special link for a discount for the summer intensive. If you guys want tickets to this event at a discount, reach out to Evan. He can send that link to you. Evan, use that sales promo code that we have going and get everyone a little bit of an extra discount there. But if you join this event halfway through, which we are right now, you can get copies of the recordings from day 1, day 2, and day 3 with your ticket purchase there as well. And this event is going really deep into the different types of investments that you can actually hold in an IRA. So for time purposes, I'm going to go ahead and move on. But if you guys have more questions about this event, just ask Evan about it there in the chat, because I really want to focus in on our big grand reopening events that we have coming up starting on August 3rd. So if you guys have been familiar with Quest for a while, you know, before the pandemic, we hosted a lot of events, mixers, classes in our Texas offices. So we have physical offices in Houston, Austin, and Dallas, and we are opening them back up for mixers and lunch and learns starting here on August 3rd. You guys can scan these QR codes, or you can head on over to our website and register for free. These will be a lot of fun. We'll have snacks, we'll have drinks, we'll have vendors, prizes, giveaways, and we're really excited for these. So if you guys are local to one of our Texas cities, be sure to come join us at these events as we kick it off and bring back those in-person events. Now, we do also have a promotion going on for the month of July. This is our rewards for deposits promotion. And I really like this one because this is valid for both new clients that are just getting signed up with Quest, or if you are a current client and maybe you have a new investment coming up or you're looking to move some more of your funds over into Quest, we are giving away up to $500 in fee credits from now through the end of the month, as long as you initiate that transfer or rollover before the end of July. And guys, reach out to Evan. He's here to help you. He's very knowledgeable about these transactions and getting your IRAs open and funded here at Quest. So be sure to take advantage of those resources that we have. And Evan, be sure to put your contact information there in the chat. So if anyone is interested in opening an account or getting some more funds moved over, we can definitely help you out with whatever step of the way you might be in for that process. Now, my last announcement that I have today for you guys is our referral program. So as you know, if you're in real estate, you get a lot of your business by word of mouth, right? So we have actually revamped our referral program this year. For any new client that you refer to Quest, if they list your name on their application, you guys will each get a $25 credit to your accounts. And we have a little web page set up for this as well that walks you through exactly how this works, how you can get your credits. This web page is refer.questtrust.com. Again, that's refer.questtrust.com. It has all of the information of how you can get signed up for our rewards program. But if you have friends, colleagues, family members who are interested in opening IRAs at Quest, or they could benefit from having a self-directed IRA, be sure to share this information with them. And on top of that, we actually totally forgot to put this in my slides, but we're waiving account opening fees right now. We've got a flash sale going on through the end of this weekend for Parents' Day. So Evan has that promo code, guys. Just reach out to him. He can get you all of that information. So you can get your account opening fee waived. And if you refer someone to Quest, you'll each get a $25 credit to your accounts. So lots of great things that we have going on there. And if you have questions, let us know. You can give us a call, send us an email. You can even chat live with an IRA specialist directly through our website at any time during our business hours. So I hope that you guys find today's class helpful. I hope you enjoy the types of education that we're putting on. And I really hope to see all of you guys that are local at our grand opening events that we have coming up here in August. And without further ado, I would like to go ahead and bring back Alex Buriak from Jet Lending. Alex has been a loan officer with Jet for several years now, and he actually runs all of their business development. If you guys may know Jet Lending, you know, my dad, Eddie, actually owns the company. He is not the best with technology, but Alex is very skilled in these areas and has really helped Jet grow over the past couple of years. And today, Alex is here to talk about asset-based lending. So Alex, go ahead and take it away. The floor is yours. I'll come back on at the end for some Q&A. So if you guys have questions, put them in the chat box, put them in the Q&A, and I'll come back on at the end.
All right. Well, thanks, Haley. And Jet Lending, as always, is really happy and excited to be a part of anything that has to do with Quest Trust. Great company, local in almost every Texas market. So we really appreciate them. And a lot of their clients actually do business with Jet Lending. So we always really appreciate it. Today, we're going to go over, asset-based lending. We're going to go over short-term, long-term, and then we're going to go over some examples about how calculations are done for like profit margins, on how, if you are going to use this type of lending to acquire inventory, whether it's flip or rentals, short-term or long-term, commercial or anything like that, how do you do that? How do you justify some of these costs to see how can you make a profit while using asset-based type lending? And just let you go, I'm going to put in the chat messages a little bit about what we're talking about. So, if anybody gets lost, you can kind of follow along there, and it's not pasting. So I'll end up putting it in later. So a little bit about who we are. For those who don't know, we're Jet Lending. So Jet Lending's been around since 2004 in January. So anything to do with short-term, long-term, transactional funding, anything to do basically with investment real estate, we can provide a service to you. So like Haley was saying, we are basically a paperless company. You do everything online. You can log in all your portal and see every deal that you've ever done. You can do your draws online. We try to make it as simple as possible because finding the property should be the hard part of investment real estate, not finding the money. So money should generally be easy to find. So basically, Jet Lending is just, we're trying to be a one-stop shop for everything that you would need to grow your business and grow your inventory. So that's who we are. If anybody needs any kind of special business plans to go over or anything like that, y'all put all of our contact information in there. Give us a call. We'll go over everything you need. First thing we're going to talk about today is short-term asset-based lending. And that's what most people think of when they think of asset-based lending, or what you may have heard hard money lending. And the reason why they call it hard money lending is because we lend to the hard asset. So we're not lending to credit scores, and we're not lending to anything else that a conventional lender may lend to, and we're lending to distressed assets. So we lend to that hard asset. That's our collateral. So we're going to be in the first lien. And what's different about Texas markets, those of you who are watching from other states, you may be very surprised to hear about what I'm about to say about short-term lending and what we're going to go over in long-term lending, especially in the state of Texas. We are a true loan-to-value lender. So that means that you very well may be coming out of pocket $0 at closing when you do your deals. It depends on how you bought the property, between the purchase price, the after repaired value, and the repairs. And I'm actually going to show you guys an example about how to calculate margins so you know how to make offers using asset-based lending. So Texas, we are a loan-to-value lending state. So we're going to be able to accommodate that. 100% rehab costs, pretty standard in short-term asset-based lending. So the reason why you should consider the short-term asset-based lending profile for choosing a lender and things like that. So basically, people pay the points in origination for speed. So we close within 3 days from clear to close from title and appraisal report in. That speed offers you the ability to negotiate better on your purchase prices, okay? Because you're not going to change the rehab number. And you can't change, any kind of holding costs or fees or anything like that you're working with. The only thing that you can change when acquiring short-term, asset-based product, if you're buying a house, is the purchase price. And that speed of the transaction.
Might have frozen. Oh, sorry, Victor.
The speed of the transaction is your bargaining chip. Okay. So anytime you guys are looking to acquire another asset, you can actually even get us or, a lender like Jet Lending involved. I'm going to speak directly with Jet Lending because that's who I work for. But these are kind of things that we even go over on what questions to ask your lender. So we can even get involved, make sure that the person knows, hey, this is going through. Jet Lending currently has about 70 million of our own money on the street today, all in Texas. So we're not running out of money. In fact, we're looking to deploy more. So we're always there to help you, negotiate through. And one of the examples we'll go through at the end is how to calculate your profit margins so you can see if you're buying this right. These are all the things that we do for every person that comes in the door. So short-term asset-based can cover all gamuts of all your investment properties. Whether if you are, let's say you pick up a property and maybe it's not for you, so you end up wholesaling it. So we can do asset-based lending can help you with transactional funding, single-family homes, multifamily, commercial. We're going to go over on our next segment, long-term asset-based lending, commercial long-term asset-based lending, the 30-year commercial products and things like that. Getting your head around why this isn't bank rates because it's lending to a hard asset. But how can you still make money with higher interest rates when, especially going off the appraisal increases over the years with the true equity spread value as you grow over the years? Like I said before, everything's done online. So, you go to your portal, you look at everything, stuff like that. One of the major things, the big key things with short-term asset-based lending is the initial analysis. And that's where a lot of people get stuck in the beginning part of either they're just starting out in the business or they've done a few deals, or even if they're seasoned, that where is the market at today? Especially in this market in 2021, and we've seen some pretty large increases in value. And there's two things that I always caution people about is make sure that you are always using current data trend, where you are taking what I call retrospective data from the past to warrant value that is sustainable. If you look at what could trend past that proven data, that's called speculation. You can use that in asset-based lending, but we always have to go with, appraisals and things like that. Not to say appraisals are 100% correct. You can line up 10 appraisers and get 10 different values, but it is a variable that's used to warrant value in lending. So what we do is we try to educate our borrowers with asset-based lending is how to evaluate properties on what you're doing in the rehab so you can really have no surprises. That's the biggest thing with the short-term asset-based lending is it's so fast. You don't have a lot of time for surprises. So you have to try to be aware of what's going on. And that's why we build a team behind all the investors is saying, okay, we've had 5 people look at this deal with pictures. We've seen what the repairs look like. This is what you're projecting in the market. This is what the values could be. Are you aware that your repair budget is a little shy because, shingles have changed for price? So another good reason why people use asset-based lenders or even just for analysis is because we do so many deals in the marketplace that we are your touchstone of reality of where values may be, where repair budgets look like since we handle all the draws, all that kind of stuff. So we are a good educational outlet as well to show you what's going on in the market. It's not that if we disagree on values, an asset-based lender won't do the deal. You just may be more out of pocket on your initial stage to cover the risk. So this is all about evaluating risk. Basically, towards the end, when I show you the math, all of this is really calculation of math and relative risk. Are you aware of this relative risk? Are you willing to accept X as your risk to make Y? So we're going to go over that. And towards the end, after we go over some non-QM products and how they work with asset-based lending. So the short-term stuff's pretty cut and dry. I mean, you're looking at about 70% loan to value of the ARV, your minus repairs at closing. You buy anything less than that, that's how much money I have to roll in at title for closing to roll in all your closing costs. So you can legitimately, and it happens every week, that somebody comes in $0 out of pocket at closing. So when you guys hear those radio ads and get those emails, be in real estate with $0 out of pocket, yes, that can happen, but you still need to have liquidity in short-term and long-term lending, because liquidity saves you when things go bad, and it helps you float multiple properties to pay your interest payments and get your draw started. And if anything for contingencies come up, they help you stay in business. And that's how, you use your liquidity. You use an asset-based lender for the large part of the acquisition, so you can save your money to stay liquid. You could save your money to buy more properties. So that is what the worth is for short-term asset-based lending, is so you as the investor stays liquid by borrowing money from us with a spread cost. We make money and you make money. Both parties have to make money in this deal to make sense. So short-term deals, you're looking about 6 to 12 months. That's what's really considered short-term. Anything over 12 months, you have to really consider, is this deal really worth my time? Most 12-month deals over is going to be something, a larger commercial or a multifamily deal, or something that takes a lot of, like you're doing $150,000 in rehab, which, as long as the profit margins count and you're making money, it makes sense. So get with us. We'll go over the profit margins with you. Make sure this is the kind of deal that you are wanting to get into for the spread in which you're projecting, so you can see if it's something right you want to do. For us, we don't have prepayment penalties, so we're not looking to milk every nickel and dime off you. You borrow money from us, you pay it off early. Congratulations, let's do another one. So I'm going to put a link in the chat section that goes over. There's a video that we have for all of our clients, just about 25 educational videos. They're about 3 minutes a piece, about like what to ask your lenders, how does hard money work, things like that. So you'll have access to that for being on this Quest Zoom call. So you'll have all the access information you can, because as the day goes on, you're going to remember some guy in a mustache was talking to you and he said something, but you want to review it. So I totally understand that. I'll get you all the information you need. And I got it. So yeah. So what does asset-based? Asset-based is based off the hard asset. PR just asked that question. It's based off the hard assets, which is the property in which you're buying. So asset-based long-term, and I'm going to see if I can copy this for you guys, because I'm going to say a lot of math in this, and math never goes over well just by talking to it. And I'll have to type this in when I'm not in, because Zoom is not allowing me to paste it. So asset-based long-term. This is really important for a lot of you people that are trying to do rentals, okay? There is conventional lending, which is what a lot of people are used to. When you bought your personal residence, or even if you have a few rentals, you may have used a Fannie or Freddie product. The rates are a lot lower, but they're much more difficult to obtain, especially as you grow your business. The asset-based long-term product is a way to base everything off that hard asset again, but the rates are going to be higher. Due to that, you may cash flow less, but you increase your inventory, because if you're looking at increasing your inventory as a landlord using asset-based products or even conventional, the one thing that you should be really paying attention to is the appreciation of the area, because that's really where your money is going to come from. You're going to be holding these for 5, 10, you may hold them for 20 years. And that $150,000 property is now not worth that anymore. It's worth much, much more. So the argument that we like to project, especially with non-QM asset-based long-term type products, is that you can severely increase your inventory, increasing your portfolio to increase your wealth. Okay. So how do you do that? So basically, long-term asset-based product is based off what's called the DSCR, which is called the debt service coverage ratio. And that's the ratio between your property payment and your collected rent. So they divide those two and you get a ratio. Most ratios that are used in either asset-based spaces and even some conventional banks, when they look at portfolios, is anywhere from 1 to 1.3. So 1.2 is a good average. You'll see a lot of 1.2s. You'll see a lot of 1.3s when you're looking at multifamily, 1.3 and up. So that means that if your mortgage, your principal, interest, taxes, insurance, and any association dues, which are very important if you're buying like condos. Okay, do not forget to check the association dues because that can make or break a deal cash flowing. Okay, so principal, interest, tax, insurance, and association dues is, let's say, your payment. So let's say that was $1,000 a month. If you had a 1.3% DSCR, a debt service coverage ratio, that would mean that your projected or current rents would have to be $1,300 a month. So that means the property is self-sustaining 100% plus 30%, 1.3. So that's how debt service coverage ratio works. Now, the cool thing about math is you can find out all sorts of things about your property by knowing a couple variables. So if you know your mortgage, your principal, your interest, your taxes, your insurance, and any association dues, and you multiply it by your DSCR, you get the amount of rent you would need to get that property for the DSCR that's required by your lender. If you change the variables, if you do rent divided by your PITIA, you get the DSCR you'd need for the rent that you're collecting. If you rent divided by DSCR, you get the PITIA that you need. So that's, so I'm going to try to put these in the chat boxes for you, probably after I get off, so I have time to type them out. So you guys have access to them. And for some reason you're not seeing it, just reach out to me. We'll get you my contact information. I'll send you everything that you see here today, so you guys can start really working investment with math. Because I'll get it still to this day. A lot of people are like, well, I only buy in 77XXX. And I tell them you should only buy when your profit margins meet your business plan. I don't care where it's at. Just if it makes money, you're good to go. So, so another thing that you need to consider when you're doing non-QM long-term loans is when you're calculating these margins. Should you use gross rents or you should use net rents? And what I mean is gross rents would be like the $1,300 that we just talked about. If you use net rents, you would subtract any other maintenance fees to that, and that would be the net rent that you would take in. Most regional banks and most all non-QM lenders for long-term uses net. So I suggest if you're already aware of how to calculate with gross and net rents, start using more net because you'll be more in line with your lenders. Okay, and I will give you a sample equation like that in the chat box so you guys can review that and make sure you guys know how to do that. So if you are in the 30-year space, non-QM, you can be in as low as like 4.25 to about high sevens. Now I say 4.25, there's a catch, okay? Anything like that usually have a lower loan to value. So as you're looking at your terms, which I feel that anything in short term or long term is more important than you looking at your origination and rates, because terms can change those things as the loan progresses. Terms are very important. So always ask about terms and always get those terms in writing on your loan estimates, because those are extremely important. You may get people that have 2 points and 8%, 9%, but then there's all these minimums or there's a rate increase in your term. So just remember, when you're using short-term and long-term lending, talk about terms. So you're going to end up in probably the low sixes if you're using non-QM long-term financing, which is fine, because if you were using a Freddie or Fannie product and you had maybe 6 or 7 already, you may have to show a lot more PITI per property in your liquid assets and may not be able to close that deal. So again, getting your head away from just looking at rate and start looking at profit, okay? And profit that you're speculating down the road with appreciation, some cash flow, and things like that. So non-QM is a great way to increase your inventory and increase your wealth as you grow in your business. Another cool thing about using these formulas for non-QM is you can actually even find out the ARV that you would need for the purchase price that you're buying it at to see if you're making the money that you're projecting. So I'm going to put that in the chat box as well, and I may just put a link to the video so you guys can actually go over the math again, because this is really important. You understanding the math of asset-based lending and understanding that really will help you buy properties for the dollar amount that you want. So again, you have less surprises. QM, qualified mortgage. Somebody just asked, what is QM? Non-qualified mortgage. QM means qualified mortgage. So I will put that in the chat box, and I will, so you guys can check that out. This is a great opportunity using short-term to long-term, or even just buying it non-QM long-term, for a lot of you investors that are using what's called like the Bur Method, buy, rehab, rent, refi, repeat. So this is a way that you can really scale that model up, because you're buying to either distressed assets or you're buying assets that aren't so distressed, but you're closing quicker because you're basing it off the asset and not a conventional mortgage. Okay. I'm going to share my screen. So my face probably is going to go away, but I'm going to actually show you what I'm talking about now, because I know lending, I know you guys are probably, when you guys heard lender and lending was coming up, you probably just were so excited because it's math. So I'm going to actually show you what this is so you can see it and have a better understanding of what I'm talking about and what these stuff looks like. So I'm going to share my screen, and we're going to do a little examples. All right, give it a second to make sure it loads in. So this is one of our analyzers, okay? So let's say you had a property, and let's say you wanted to buy it for $180,000, okay? Let's say the ARV was $300,000. Let's say the repair budget, let's say you had to put 40 into this property. Let's say the estimated taxes for this, let's say it was about $6,500. Okay. And then for short term, if you're holding the repairs in escrow, so you do some work and your lender reimburses you, so you net zero, this loan is at $210,000. I'll lend $170 at closing, holding $40 in escrow for your repairs. The reason why we hold repairs in escrow, and it's another good question to ask your lender. Do you take interest payments? Do you hold my repairs in escrow? That money is earmarked for this property and for your deal. So when you request it, it's ready to deploy. That's why we reimburse clients so quickly on draws, because the money's waiting per deal. So it's something to ask your lenders if they're escrowing your draws for your property, so you don't have any issues in reimbursements. So originations range from 2 to 4%. So let's use 3. Interest rates usually range from 9.9 to 13.9. So let's use 11.9. All right. So you can see here's your origination fee. For jet lending alone, it's not all lenders, but I'll let you know. Document fee, it's what we pay our lawyers to draw docs. We even estimate 1.5% for title fees. We won't know that until we get the HUD on what title is charging you, but we like to put a number here so we can tell you really well what's going on with your deal to see, how much money, or if any money, you're coming out of pocket at closing. Processing is usually, your flood certs and anything like that we got to pay for, and to pay our processors. So what you're seeing is your total closing costs, including non-lender stuff, is like title fees and things like that. It's about $10,805. You bought it for 180. I was lending 170. So you're coming out of pocket another 10 to make the difference. So you're 20 grand out of pocket. All right. If you bought it for 160, you're out of pocket $805. So you can see the difference. A purchase price, how it makes a difference, is the only variable you can change in the initial part of the acquisition. You'll see that's negative. That means you're $0 out of pocket. And you'll notice one other thing that happened, liquidity. We already talked about that. If you bought it for that 180, you'll notice, well, I want to see around 49 grand in your account. That could be income from a job you do. That could be credit lines. That could be cash on hand. You may have a funding partner that you're working with. Maybe you have a person at Quest that's like, hey, I got to put my money to work. I need to see that you have access to make sure that you have you're safe in the deal. It means you can make your interest payments. You can come out of pocket that 20 grand. You can pay. You can start at least a third of your repairs. You don't have to do a whole third, but it's just those metrics. Having that shows a very low default rate. As a lender, it is a misconception that your lender wants the property. We do not want it. It makes it look bad on our bank lines, and it muddies the works. We don't like it. We like our lenders to. We make more money when you keep buying. So I'm going to put this in the middle at 170. Okay. So if I go to my deal analyzer, and let's say you were in this deal for 6 months. You got to pay for utilities. Let's say this is a bigger house. Let's say it was $200 a month. Agent selling commission. I always suggest you use an agent. It sells faster. You will hear there is arguments for both topics. Okay. So you will, make that decision. If you are an agent, my personal thing is being an agent. I'm an agent. So being an agent, if I make commission, that goes into a different profit and loss statement. So I still calculate that because it's not part of my investment. But let's say we do 6%. We had a buyer's and seller's agent. We sold it for $300,000. Not so much in this market, but in other markets, last year, a 3% seller's contribution was pretty reasonable. So right that if you paid back the 210, if you paid yourself back the $10,805 that you put in the deal, if you paid yourself back 6 months of loans that you paid Jet Lending for interest payments, if you paid 6% commission fees to your agent, if you did a 3% seller's contribution, and you had a $4,500 closing cost on your second closing when you sold it, because normally the seller will pay those fees, you're making $30,750. Will you pay $10,805 to net $30,000 when it's all done in 6 months? Maybe yes, maybe no. That's a question for you and your business plan on what kind of profit margins you need to stay in business. You could see, if you were in this for 9 months, you're only making $22,000. If you didn't have a seller's contribution, you're making $31,000. So this is the kind of things we do to make sure when you're getting into this deal, is this the right deal for you? Does this make sense for you? Now you're saying, well, Alex, I'm not going to flip the property. I'm going to hold the property. Okay. So we'll go to our rental calculation. And let's say there was no association due. Vacancy and maintenance, normally 15 to 20% is pretty average. I always like using the higher number because if the higher number works, the lower number just works better. So let's do 20% vacancy and maintenance cost. You still got that first out-of-pocket closing. At this deal, let's make this rent $2,200. This is a refinance, so usually refinances are at 75%, purchases are at 80% because purchases are usually with a property that has no repairs, so it's already at value. A refinance from a hard money, if I'm lending 70 and I'm refinancing you at 75, that's more. You're going to see in a second on your second closing cost. 30-year loan, we're at around 9%. Okay. So your DSCR in this deal is 1.07. So it's well below 1.3. You're making about $150 a month cash flow. And right now, most of you are like, ew, I don't like that. Well, you're in a positive, because if you look at your equity growth over 30 years, that's $810,000. That's what I'm looking at. So make sure that you start understanding the math of lending so you can increase your inventory so you can make more money. I know this was a mouthful. I could talk for hours about lending and how to incorporate different type of statistics and things like that to see how you can grow your business. This was just a kind of a brief overview. Again, I'll get you guys all the information you guys need for reviewing this topic. I do know that Haley has wanted to open up some sort of a question and answer time to make sure that any specific questions were addressed. So, I mean, I can until I see anybody coming up here, I can look at the chat box and stuff like that and see if anything comes up.
Hey, Alex.
What's up?
Haley's computer actually is all static right now. So I'm here. That's why I always have two of us on.
Okay.
I'll go ahead, and we do have a lot of questions. First of all, that was a really, really good presentation. I really, really like the numbers, how you broke that down. That's super helpful information. I haven't seen actually a lot of people we bring on do that before. So that was really good information. I was really enjoying that.
Good.
So let me go ahead and go through some of the questions we have here. So Carmen asks, what markets do you lend in?
So for our short term, the loan to value stuff that you guys saw with $0 out of pocket, Texas. Anything else, I have to use my outside bank lines for all the other 50 states. It's loan to cost. So it's going to be it's not totally different, but you're going to be coming out of pocket outside of Texas. So in Texas, loan to value; outside of Texas, loan to cost, and for the non-QM long-term stuff.
Okay, awesome. David asked, what DTSR does Jet require? Cash out of refi of an existing rental property?
If it's single family, you're going to be at 1 to 1.2. If it's multifamily, you're going to be at 1.3 and up, but usually it's 1.3. One of the things, you said his name is David?
Yes, David.
So one thing, David, you need to realize, the lower your DSCR, the better your rate, because I'm sorry, the higher that your property projects. Like let's say you have a single family, it's like a 1.7. It is a super unrisky rental. Okay, your rates are going to be lower. So the DSCR calculations on rate go with the DSCR number, higher the better, and your credit score, the higher the better. So short-term lending doesn't really have a credit score issue. If you have we've done loans for people that would like a 520. We'll still do the loan, but you're going to be at higher rates. So just know that the higher the score, the higher the DSCR, the better the rate for the long term. The higher the score, most likely just shows that you have some safety in managing your funds.
Okay, and then second part to David's question is, do you lend to LLCs?
Yes. We'll lend in Texas for short term. We'll lend to personal and LLCs. But yes, LLCs. In fact, LLCs, if you guys are going out into the world, other states and stuff like that, you're going to start seeing LLCs are going to be the preferred method. But yes, we'll lend to both. Okay.
We had a couple questions. A lot of people want, if you're able to put that Excel sheet with all the equations, a lot of people want to be able to get that. Is that something that you can offer?
No problem. So let me make this disclaimer now. I made that. Okay. It is for, let's call it entertainment purposes only. So there's going to be a lot of due diligence that you have to do. There's going to be a lot of equations and things like that. So I just kind of went over my experience and made an Excel sheet. So do not use this as, finite. This is a reference tool, because there's might be things that little things that I didn't put in, some one-offs. So use them as reference tools. Do not use them as the gospel. But yes, I can get that to you.
Okay, awesome. PR asks in the chat here, for someone who's starting out, how can Alex help? How can Jet Lending help? Do you guys run webinars? Do you guys have events? How can you help people who are just starting out?
Yeah, so we just had one yesterday. So every third Wednesday, we have our super investor meeting. So that's at Stampede Houston. It's on the north side on 59. If you go to either www.jetlending.com, you'll see and I have to change the timer today because it was yesterday, but you'll see like a clock ticker for the next one. So you can RSVP to all the way up to November. I regularly update our YouTube page with educational content. So everything that you see me do and everything I've talked about, I've actually talked about in depth in a lot of our educational videos. If, let's say, neither one of them are for you, give us a call like at 281-872-7800, and we will actually spend the time with you and go over everything that you're planning. If you have a deal in mind, you can submit it online and we'll do the same things. Hey, listen, what am I projecting with this? What are we looking at here? And we'll go through that. So you can either, if you're someone who just likes to go late at night and watch videos, you can go to YouTube. If you're someone who likes to talk to somebody, you can give us a call. If you like someone to see somebody, come to our event every third Wednesday of the month.
Yeah, guys, I definitely recommend you check their event out. I was there yesterday. Quest is there every third Wednesday of the month as well. Really good, a lot of good vendors there, really good information in the presentation, and they have free food. The food there is really good. So definitely come check it out.
Tonight.
It's awesome. Let's see, we have David has another question. So what is the longest term you make for short-term lending?
We will do a 12-month note, and as long as your note is current, we have never called a note. So just know that every time you go past your maturity date, you're going to have extensions put on your payoff. Okay. Those extensions are due at payoff, not at extension. So as long as you're paying your note, we've never called a note. Now, please don't do this to me, but we've had loans stay on our books for 3-4 years before, but they pay every month. There may be some issue that they ran into. We do not want the property. We will work with you on everything. The longest note we'll write at closing will be 12 months.
Okay. Here's a good question. I like this question. So, since this is Quest, and a lot of people watching this have self-directed IRAs or interested in self-directed IRAs, can you bring IRA money as a down payment for an investment and a loan from Alex?
As long as you are within compliance with Quest and its as they structure with their custodian duties, especially if you're a Quest member, we don't mind. Johnny Hayes, one of the owners in GM, he'll handle that directly because there's a lot of different things that need to be done to make sure you're within compliance. Because a portion of that profit or whatever I'm not a custodian of self-directed IRAs. I just know that not all that profit can go back into your pocket because you use part of that profit, that self-directed IRA. So we just want to make sure that you're within compliance. So you don't get into any kind of weird tax issues or governmental regulation issues. But especially Quest members, yes, because how Quest runs their business and how good they are, we definitely honor that.
Okay. Do you guys provide proof of fund letters?
Yes. You don't even have to have a property. You can go online right now and you just put your name and stuff like that, and it'll ask you if you have a property. Just put no, and then it'll go into our automated system. It'll be tagged to a loan officer, and they'll send you one. But if you have an idea of how much money you need, or let's say that you get like a $400,000 pre-approval letter, And you're like, you know what? I'm not going to buy anything over 180. We'll send you one just for that. And the reason why I tell people that is this: that pre-approval letter is good for 6 months. If you're negotiating a property and you got a $400,000 letter and you're buying something for $52,529, don't come with the 180 letter if you don't have to. Come with what you're asking for, because it gives you a better field of negotiation. So yes, if you have a range, we'll give you a big range, but let's say you're going to have eyes on a property, we'll send you a specific one too. So yeah, you can do that all online, and then you can text, and our loan officers, they'll send, I mean, it's faster than same day. I mean, it's within an hour or less.
Awesome. Guys, if you have any more questions, definitely put them either in the Q&A
and just to let you know, for that pre-approval letter, we're not pulling your credit. Everything's going to be verbal. You got to prove what you said when we're going to closing. But just to let you know, we're not pulling your credit for that.
Awesome. Can you give us one piece of advice, one golden nugget? If you're an investor, if you're a new investor, if you're a long-term investor, whatever you may be, what's that one piece of advice that you would suggest, everyone listen to and really, understand?
What I would suggest is, and what I'm about to say, like, don't take it the wrong way. Stop getting in your own way. Okay. Stop waiting. I'll hear this. Well, I'm going to wait for the market to go down. It ain't going down anytime soon. All right. I'm going to wait for this. I'm going to wait for that. Oh, I want to read this book first. Start. There's nothing. Stop being so afraid of failure that it stops you from succeeding. There's no better educator than failure. Okay. Nobody that's been super successful in this industry hasn't gotten a shot in the ribs. Okay. So if you have eyes on a property, if you have an idea of how to make a profit, if you have a want, there's a way. And you're in a right group right now. Like, if you're on this now, you're already halfway there. You're meeting people, you're starting to network. Get in the game. Okay. Because you're going to blink your eyes and it's going to be next July. And if you started, you're going to wonder what all the fuss was about. If you don't, you're going to be here next July saying, man, I really wish I could do this, but get the butts out of the way. Just start and run, and just run full and get a good team behind you. And I'm telling you, you will wonder why you didn't do it 10 years ago.
I love that. That's really good advice. So, Alex, if you want to put some of your contact info in the chat box, put your email, put your phone number. Guys, I really suggest you check out, Jet Lending. They're really awesome. They have a lot of good information, a lot of good educational materials, and also, like we were mentioning, come to their event third Wednesday of every month, the Stampede. It's a really good event. Quest is there. There's a whole bunch of other vendors, so you can, get some good networking in. But Alex, do you have anything else for us before we finish this off?
No, just remember, as the day goes on, just don't be upset if you forget things. Don't be upset if you're like, oh, I don't get it. You're in a great place where you have a bunch of people that know things that you don't, and you may know things that they don't. Get together, build your team, and get it done.
I like that. Love it. All right, guys. Today we're going to finish off our webinar. I hope you guys enjoyed. If you do have questions, reach out. Again, Jet Lending. You can reach out to myself as well if you have questions about IRA investing. And really thank you guys for coming on. And thank you, Alex.
No problem. Thank you for having me.
Thank you.